Hey traders, Raghee here, and we just survived a morning where we saw the volatility hit the intraday charts as we're getting basically a live broadcast of a job interview as Lyle Brainerd looks to become the number 2 at the Federal Reserve. The reason this creates so much volatility is because now we're getting specific questions to somebody who conceivably is going to be amongst the upper ranks and a full-time voting member of the FOMC. So the way that she's going to look at the markets in terms of, I should say the economy, the way she's going to look at the inflation issues, and her overall philosophy is going to move the market around. And we saw that happen. She's a hawk, talking hawkishly for the most part, and the markets responded in kind. Now, after the morning is done, we start to take an assessment of what survived, right? What survived kind of this onslaught. Of course, the NASDAQ is the most rate sensitive of the indices. And the S&P is in an interesting place because the S&P is never the captain of its own ship. Hear me out, and this is why. The S&P is weighted by 3 sectors, and in this order. The XLK Tech, the XLF Financials, and XLV Healthcare. Well, if you take a look at the NASDAQ, it's XLK, it's XLC, it's XLY. Tech, communications, consumer discretionary. But you take a look at the Dow, where a lot of people are still kind of doing the old school, which at a time, a couple decades ago actually, at a time would have been appropriate, but now it's just not up to date, which is looking at IYT and XLI. That's classic Dow theory. You're talking my language. I love Dow theory. But of the 6 major tenets, this is the one that's probably really not applicable anymore because the Dow weighting of Charles Dow's era and the stocks, the composition, is so markedly different. The number 1 weighted sector in the Dow is financials, followed by tech. And you also have healthcare in there as well. So financials are the number 1 weighted. And then you've got tech. Well, that's a lot like the S&P, isn't it? So this is why the S&P oftentimes looks, because it is, like it's in a tug of war between the NASDAQ telling it what to do and the Dow telling it what to do. And it has to do with that stock and sector composition. Well, this is great for us because now we know what is inside these indices. They're not these great, big, giant things. They're individual stocks with high concentration weighting. They're sectors also with high concentration weighting. So when we understand the weighting, we understand what the indices are going to do. But it works the other way around too, right? We can go from index sector stock. We can also understand stock sector index. And the cool thing now is we know the Dow is a relative outperformer. It's not as interest rate sensitive. It's the one that has not printed a red grab candle. The worst it's done by way of weakness is a blue grab candle. And we have overall, what I believe, relative strength. Relative to the NASDAQ and the S&P, the Dow is the one we want to watch for more upside. Well, then that brings us to, do we like the financials? We do. Do we like XLK? As a relative outperformer within the NAS, I do, but I'm going to put tech on the back burner because tech is going to be kind of tricky with this interest rate sensitive environment. We'll keep an eye on healthcare, which I will say is losing a little bit of traction, but ultimately it's really not going anywhere. It's gotten a little choppy. We'd like to see it oversold and then bounce. So I still have faith in healthcare. But financials look great, and that added now to lower weighted sectors within the Dow, like IYT and XLI, we know where we should be looking, and it's the Dow. If putting together a properly built watch list is the precursor to great trades, this is the process. I get this question all the time. This is what I'm going to be focusing on. And let me get a little bit more specific. We're going to be focusing on the Dow, the IYT, the XLI, but also XLP, XLB, XLE, right? So, but Dow from a futures standpoint is what I really want to take advantage of going forward. All right, hope that helps. And as always, if you're catching this on YouTube, feel free to leave a comment, smash that like button on the way out, and be sure to join me tomorrow, Friday, over at the Simpler Trading YouTube channel for the very next Charts and Coffee show. We broadcast every morning live at 9 a.m. All you need to do is just go into the YouTube channel and you'll see the live stream you can catch. Live Q&A. We take a look at the markets together before we go into our respective trading rooms. So I'll see you all in the next update. Be good to each other. Hey traders, Raghee from Simpler Trading. Thank you so much for watching this video. Be sure to leave a like and a comment below. And remember, subscribe and click the bell icon so you'll get notified of the next update. And when you're ready to join me for live trading, be sure to head on over to simplertrading.com. I'll see you in the next update.